welcome to RANsquawk's EU morning briefing for Monday the 27th of July 2009. We've just gone through now 9 o'clock in London to take a bit of an overview of the weekend and overnight press. Starting off firstly in Asia, you can see equity markets again in the Nikkei posted gain around 1.5%. That was the 9th consecutive session of gains in the Nikkei and does mark the longest winning streak there since 1988. And that optimism did carry through in terms of the EU equity open, where we did see the dollar weakening, Aussie dollar, Kiwi dollar and risk appetite conditions all trading higher for the time being. That was in early trade, however we have seen somewhat of a reversal since the Europe cash open. Still trading slight positive though at the moment, we're up around 0.5% in the FTSE CAC and DAX. To take a look then in the Asian Pacific news coming out of Japan itself, unemployment rates may exceed 5.5% later this year, marking a record high according to a survey by the Economic Planning Association in Kyoto News. And over in China, must continue to use fiscal monetary policy to stimulate the economy or face a backslide in growth, according to National Statistics Agency's chief economist. Elsewhere in terms of global news, worth noting on the front page of the FT this morning, UK faces credit card crisis on a US scale. The credit card crisis that caused billions of dollars in losses among US banks is spreading across the Atlantic, with lenders in the UK and the rest of Europe bracing themselves for a rising wave of defaults among consumers. An article citing IMF data. And elsewhere from the weekend's press in the US, Fed's Bernanke said that the US jobless rate is likely to stay high even once the nation exits recession sometime in the next few months. In a taping, Bernanke on the record special that will air on television station PBS 3 times this week. Bernanke said it takes GDP growth of around 2.5% to keep the jobless rate constant. Bernanke expects inflation to be quite low in the next couple of years because of slack in the economy, and if the economy begins to show strength, we'll have to gradually unwind special programs. Elsewhere in commodities, WTI crude futures, as mentioned, did struck a high just shy of the $69 handle at the market get-go with a weaker dollar, however, as the dollar has bounced off its lows, as crude off its highs, but still in positive territory for the time being. In terms of UK news flow, UK Home Track housing survey for July, that came in flat on a month-to-month basis, the same as the prior month, and flat for a third consecutive month in July. But a broad-based recovery in house prices is still a long way off, with rising unemployment and a shortage of mortgage finance standing in the way, according to that Home Track report. Elsewhere, a survey of Deloitte got a bit of attention. Britain's economy will grow just 0.5% next year and 1.5% in 2011, meaning it will take far longer to recover than in previous recessions. Again, that's according to Deloitte's quarterly review. And elsewhere, the MPC may signal the end to quantitative easing as limit looms, was in the Sunday Telegraph. This week does see the last of the 2 Bank of England reverse auctions, when that full 125 billion is now being purchased. Again, that article was looking at some of the BOE minutes and MPC sentence comments we saw last week, which have highlighted towards the bank possibly putting that QE program on hold for the time being. In terms of equity news, looking at a few specific pieces. Firstly, in the FTSE 100 for UK banks. Banks could be heading for a second wave of big losses as financial institutions begin to tackle their crippling legacy of £300 billion in lending to the UK commercial property sector. And then for oil majors, they're going to be in the spotlight this week in terms of the earnings front in both the US and the UK, the likes of Chevron reporting, as well as BP and Royal Dutch Shell, as well as BG Group in the FTSE. The world's biggest oil and gas company suffering the most precipitous fall in profits in the history of the industry is going to be unveiled this week, with the weekend's press headlines. Concerns are rising that if the situation does not improve quickly, the industry could be forced into drastic restructuring, with some compelled to sell major assets, exit countries or even entire regions, and possibly slash dividends. So we'll be keeping a close eye on their reports throughout the week. Elsewhere as well, notable mover in Germany, Volkswagen down over 5%. Loads of reports in the FT that the company is examining a capital raising exercise of around €4 billion as part of its plan to buy Porsche. And taking a look in terms of the data for today, not too busy in terms of economic releases. No 1:30s from the US. We'll just be eyeing further house data from the US at 3 o'clock London time.